25 seconds away from the opening bell in New York City this morning. Good morning. This Friday morning, we are heading towards a week of gains on the S&P. We add some more weight to the rally, just a little bit, up 0.2% on the S&P. On the Nasdaq, unchanged so far going into the open. Muted price action in equities, big moves in the bond market. Switch up the board and get to Treasuries. Yield shaping up as follows, up 5 basis points to 242, 241.98, and twos through 220. Euro dollar just about holding on to 110 here. Crude pulling back by 2%, more than $2 lower to 110 and about 7 cents, $110.07. That's the cross-asset picture at the opening bow. We advanced by about 0.1% with your movers. Here's Abby.
John, before taking a look at some of the stocks that are helping out the market with a little bit of a bounce this morning onto yesterday's rally, let's take a look at one sector that is dragging, and I'm talking about China Tech. Alibaba leading the way, down 4.4%. Some softening there from the recent bounce. Concerns about earnings and growth slowing on a recent report. Alphabet actually now down just a little bit too. I wonder how that'll settle out as we open up a little bit more. Moments ago, up about 0.4%, but a little bit of a mixed picture here in the U.S. for U.S. tech because of rising rates, perhaps causing some questioning around valuations. Tilray, on the other hand, soaring again, up 14%, surging ahead of a vote on federal legalization of marijuana. In addition to the meme mania as a tailwind, and then Bed Bath & Beyond up nearly 6% with more detail on Ryan Cohen's stake. Earlier this month, it was disclosed that he has a 9.8% stake in the company. Now we know that he has 3 board seats and that the company is considering forming a committee for options on their baby business. Shares of Bed Bath & Beyond up about 5%, John.
Abby, thank you. Citi with the call of the morning, maybe the call of the year so far on the Federal Reserve. This is the quote. We now expect the Fed to raise rates 275 basis points in 2022, and you will get 50 basis point moves in May, June, July, and September, and 225 basis point moves in October and December, and then again we'll make a move through 2023 and end up somewhere between 350 and 375. They say it's data dependent. Andrew joins us now. Andrew Hollenhorst, what a call from you, sir. Let's start here. You've got to call 2 things. The data, your forecast, and the reaction function, how the Fed responds to it. Can we start with the data? What is it in the data that you're seeing in your outlook that brings you to this kind of call?
I think what we're seeing is what the Fed is increasingly seeing, and what's really just evident in the data now, which is that we have broad-based inflation across categories of prices. We have it in the wage data as well across sectors. So we really have a significant overshoot of the 2% target. This is not 4% inflation. This is not 5% inflation. This is inflation that's around 8% and set to pick up closer to 9% in the next monthly reading on a year-on-year basis. And so that's why there's been such a change in expectations for what the Fed will do. This is really a Fed now that is in inflation fighting mode. And when you're in inflation fighting mode, you need to get rates to a level that actually provides some restraint on the economy. So I think that's kind of the big picture, what's behind the change in the forecast, what's behind the change in the rhetoric from the Fed. It's the need for the Fed to bring inflation down.
Andrew, can you talk to me about the balance of risks around your call, the forecast on inflation through the rest of this year? Because I can speak to a lot of people that say they expect inflation to fade and maybe a lot in the second half. Why would you push back against that? And what's the balance of risks around your base case?
So there's reason to think that inflation maybe will come down a bit over the course of this year. But if you think about the big reasons that inflation was supposed to come down, because supply chains were supposed to normalize, because labor force supply was supposed to come back, those stories, those narratives just have not come through in the data. And I think increasingly the Fed recognizes that if you don't have those kind of organic economic drivers of disinflation, then you're left looking at what can bring down inflation, and the only actor that's left is the Fed, and the Fed providing restraint on the economy through tighter financial conditions. So yes, I think we will see somewhat lower inflation readings over the course of this year, but even by the Fed's own forecast, we're ending the year at 4% inflation, and the risks are clearly to the upside with renewed challenges to supply chains, energy prices that are higher. That's very important. Usually we think energy prices higher, that's really just about headline inflation. It doesn't really pass through to goods. Listen to what corporates are telling you. They're planning to pass these costs on through to final prices. This is going to be inflationary, not just for headline inflation, but also for the core.
I'm listening to what the Fed's telling me too. and they're setting up seemingly a 50 basis point move in May. But only a week ago, Andrew, they put out a dot plot with an implied median dot of about 192% year end. You've taken basically their 2023 year end Fed dot and brought it all the way into year end 22. Andrew, what's changed in a week?
Yeah, so it sounds very aggressive in terms of how things are changing, but I would argue it's not aggressive for the circumstances. Given that we have the significant overshoot of inflation, it's not that surprising to see the Fed pretty rapidly adjusting to the new outlook, which is for sustained high inflation until you get interest rates higher. I think the important point for the Fed here, if you look at that dot plot, what was really surprising in the summary of economic projections is we had inflation expectations from the Fed projections that came up by something like 140, 150 basis points. You had Fed policy rate projections that came up in the median dot by about 75 basis points. What that means is that nominal policy rates are not rising as quickly as inflation forecasts. And that means that real policy rates are falling. If real policy rates are falling, you're not going to get any restraint on the economy. You're not going to bring demand down. That's not going to cause inflation to decline. So I think that's why we're very likely to see a significant upward revision in those dots as early as the June FOMC meeting, where we'll get a new summary of economic projections. And the other important thing is, with a lot of consensus around going 50 basis points in May, once you've gone 50 in May, I don't see what the argument is to not go 50 again in June, to not go 50 again in July, to not go 50 again in September. Even if you have that 200 basis points of rate rise, you're still only getting back to where the Fed sees some long-term neutral, and we need to go beyond neutral.
So Andrew, you don't believe neutral is where the Fed thinks it is. Essentially, that's what you're communicating here. You're saying that we can get rates up to close to 3% and that won't even be restrictive. Is that a fair characterization of what you're suggesting?
Right. So again, John, the really important distinction here is between the neutral nominal rate and the neutral real rate. What the Fed forecasts say in their long run is inflation is running around 2%. Nominal rates are around 2.5%. So subtracting 2% from 2.5, that's a neutral real rate of about 50 basis points. Well, if inflation is running, by the Fed's own projections, at 4%, you would need policy rates to be at 450 basis points to get to that same level. So, again, when we're talking about policy rates that are getting up above 3.5% in 2023, I don't think that's aggressive given the current inflation outlook.
Now, year-end 2018, you remember where the constraint came from. It wasn't in the economic data. The market just said, no more, you're done. And they were done, and they had to back away. Andrew, does that become problematic for your call? Do you have a call on financial conditions?
I think that's really important, John, and I think that's part of why we've seen some of the more hawkish rhetoric after last week's FOMC meeting. So we remember last week's FOMC meeting, thoughts came up more than expected. It was a hawkish meeting in our view and a lot of people's views, but the equity market was higher on the day. And I think if you're a Fed official and you're looking to tighten financial conditions and you see equity prices that are moving higher, even as you make a move that maybe you thought was going to be perceived as hawkish, well, that shows you that you need to push even harder. So that is important. If you get equity prices down 20%, 30%, that would be a significant tightening of financial conditions, and maybe they could pull back. Then maybe we will get less rate hikes if you get that kind of tightening from other aspects of financial conditions. So it's the whole picture that matters. It's broad financial conditions that matter. And so we'll be watching all of those things.
Andrew, one final question from me. One thing that I don't see in this call is balance sheet reduction. I've heard some big calls from the likes of Bank of America, Deutsche Bank, looking for something close to $2 trillion from the date it's announced through to year-end next year. What is your call on balance sheet reduction, and how does it connect with what you're calling for with rates?
Yeah, so we can get around those numbers on balance sheet reduction. It's a really important thing to mention. This is probably going to be announced in May, probably starting in June. I think that's the consensus. Consensus also, like you said, that it comes down relatively quickly. When we're talking about financial conditions and we're talking about how they affect the U.S. economy, you really think about things like mortgage rates, corporate borrowing rates. That's how interest rates actually get through into the economy. That's about a longer term interest rate. That's not about an overnight interest rate. So you could argue that we should be talking a lot more about the balance sheet and a lot less about policy rates. I think the issue for the Fed is that the comfort is just not there with the balance sheet. So at least for now, the active tool, and in our view, the very active tool, is going to be the policy rate. Yes, this will happen with the balance sheet, but the marginal change is going to be on upping the hawkishness of the policy rate path.
Let me throw in a naughty question, and I hope you take it in the spirit of which it's intended. Andrew, there are some people who believe that Wall Street is sort of trapped in this kind of wrestling match with itself, trying to outdo each other on rate hikes and what we need. What do you make of that?
Yeah, I think it's a fair question, John. There's always a question, is the forecast that we're seeing a true forecast of what's likely to happen? Or is this kind of, comparing forecasts across shops and, trying to, what we try to do at Citi, and I really think most of my colleagues across the street, we're watching the data. We're trying to get this right. And what we see, quite frankly, is just a lot of inflationary pressure that's probably not going to abate unless you get rates significantly higher. And that's what guides our forecast.
What a call. Andrew, thank you, sir. Andrew Hollenhorst of Citi, an outlier call. And when you get an outlier call, what do you get? A ton of pushback, as you might expect. Jim Bianco, Larry Adam, Victoria Green, still with us. Victoria, let's say that Andrew and the team at Citi are right. Let's say that you can get rates up close to 4% year end next year and close to 3% this year and throw in close to $2 trillion of balance sheet reduction too. What does the market look like?
I think Citi just told my market to hold my beer and watch this. I mean, I think it's going to be a wild ride. 50 basis points again and again and again. That's obviously well above consensus, and shock is never a good thing. Whenever you see a more hawkish than anticipated, it's typically when expectations and reality don't align up is where you see the most equity shocks. So if that happens, I would not really think it bodes well for the equity market. I would think growth gets hit harder in small caps, and I think that means the rest of the world is also going to hurry up. Everybody and all the central banks are watching each other. So I think this would make Europe move faster. And it's probably going to put more pressure on the dollar, and we'd see it has a pretty big trickle-down effect. I don't argue with what he was saying. I think he has a valid thesis. I don't think they're going to be that aggressive. I do think they're going to balance sheet run off a little faster. But I do think bull markets are killed by policy error, and this is lining up to be a big one, because I don't think the economy can withstand that. I know we've got record low unemployment, but look at the supply chain problems. Look at what's happening with prices, and how is the Fed helping? The only way the Fed helps with inflation is to cause a recession. That's I don't mean to be glib about it, but that's the only way you stop inflation is a recession.
Jim Bianco, your thoughts on what you heard, and to the three of you, thanks for being so patient as we work through it. I think it's important to work through a call like that, and Jim, by definition, it's a forecast. A forecast by definition can't be wrong until, of course, it is, but that's the view from one bank for this year. What's yours?
Yeah, my view is very close to Andrew's view in terms of that forecast. I think what Wall Street has had the hardest time coming to grips with, I'm going to respectfully push back on Larry here, is growth is not the priority of the Fed anymore. And it is inflation. And they're going to hike and hike and hike until the inflation rate comes down. And if they're going to risk a recession, they're going to risk a recession. Chairman Powell has already said there's 1.8 point jobs for every unemployed person. The stock market's going up. I agree with Andrew. They go 50 in May. That's the new hike. They're going to keep going 50 and 50. And call me when we get to 3% in inflation, and then they'll stop. I'll remind you, I've said this on this show before, 40% of the American public has less than $1,000 of savings, and they rent. They're getting killed by inflation. It's showing up in the political polls. The Fed hears this. They hear this loud and clear, and they're going to side with trying to do something for the 40%. They see all those extra jobs. They see the stock market going up, and they say, we can go and go hard because we have to, at least, if nothing else, show the appearance that we're trying to do something about inflation.
Right now, the bond market's on board. I mean, let's sit on that just for a moment. We've got an 11 basis point move on twos. Twos have gone from 140-something at the end of last month to 225. Right now, we're looking at an 80 basis point move for this month alone. I think it was Jim Reed of Deutsche Bank earlier this week who put in his morning note that this could be one of the biggest monthly moves on a two-year yield, going all the way back to 2004. And Larry, to Jim's point, and to Andrew's point for that matter as well, and Victoria, who agrees with him to some degree, this is happening. And equities, pull up the equity screen. Equities aren't collapsing, are they? On the S&P 500, financial conditions haven't tightened aggressively through this month so far. So, Larry, why can't the Fed engineer the kind of tightening cycle that Citi are talking about?
So, look, I think the economy is very healthy right now. I think the one thing that Jim mentioned, and I agree with, is that the average consumer right now is losing ground. right? It sounds good that everybody's making on average $200 more per month, but that quickly gets eaten away by the increase in gas prices. That's costing people on average a little bit more than $60. The increase in food prices up about $90. And then you throw in rents, you're underwater. And the big key will be, can we continue to raise or have job creation to offset what people are going to take away from their savings? I don't think the Fed's going to want to do anything to reduce the confidence and the hiring practices of companies. And they're going to try and keep this economy going because, again, we're only 2 years into this expansion. And if we get into a recession, we're going to have a whole nother slew of problems that we're going to deal with as all of a sudden, tax collections start to ease. So I think they're going to do everything they can.
Larry Adam, Jim Bianco, Victoria Green, to the three of you. Fantastic conversation. When will the Fed be done? The last time we had a rate hiking cycle, it was the market that told them they were done. Any different this time? Coming up, the US and EU striking a deal to help Europe replace Russian gas.
The United States welcomed the European Union's powerful statement earlier this month, committing to rapidly reduce its dependence on Russian gas.
The president going from Brussels to Poland, touchdown. We'll be talking about that in just a moment. This is Bloomberg.
The United States, together with our international partners, we're going to work to ensure an additional 15 billion cubic meters of liquefied natural gas, LNG, for Europe this year.
The US committing to help cut Europe's dependency on Russian gas. EU Commission President Ursula von der Leyen solidifying the partnership.
We aim to reduce this dependency on Russian fossil fuels and to get rid of it. We want, as Europeans, to diversify away from Russia towards suppliers that we trust, that are friends and that are reliable.
Back with us, I'm pleased to say, Bloomberg's Anne-Marie in Warsaw and Maria Tadeo in Brussels. Just as the president touches down in Rzeszów just moments ago in Poland, that trip ongoing. Anne-Marie, I want to start with the gas deal. First of all, run me through just how big this actually is, how ambitious these goals are of the Europeans.
Listen, the United States has been trying to do this, Jonathan, for weeks. We've seen them have this outreach to a number of gas suppliers to make sure they could try to fill that hole if President Putin was going to start to play politics with natural gas. But if you look at the numbers, it is a very tiny step. 15 billion cubic meters is what they're trying to do. That just means that could fill a hole for Russians' LNG imports, liquefied natural gas. As a whole, in terms of natural gas, Russia imports to Europe 155. So they're basically just trying to fill a hole of just under 10%. So it is a tiny step forward when you look at just how reliant, once again, Europe is when it comes to Russian natural gas.
Maria, how successful was this trip? And I know it sounds cliche. We often ask this on shows like this one. How do you define success? How would you define success in the last 24 hours?
And Jonathan, you're very right. When you get a full day of diplomacy, a lot of this is done for show. It's done for the cameras. Ultimately, this is Brussels, and Brussels lives of politics and the glamour around it, if you will, to get every leader here to take a picture, and all of them will tell you very nice words. And I would argue, in many ways, the symbolic nature of this was important. They wanted to show, first of all, unity, but also strength. And we did get that yesterday from that. We did hear from both the Secretary General and of course, from the President of the United States, very much echoed by the European leaders, that we're as strong as we've ever been. If we stay together, if we stick together, we are going to be safe. There was also this very clear warning to Russia, do not use chemical weapons, otherwise it will change the nature of this war. And again, another very thinly veiled, but nonetheless, their warning for China, saying we trust that you will take the right side on this and really not help Russia on the military front. But when you look at the actual details of this, as Anne-Marie said, this LNG deal, it's tiny. It's a fraction of the energy problem that Russia and the European Union have at this point. When you look at the biggest hot potato here, which is who is going to help Ukraine politically in the future, will it join the European Union or not? We got no clarity on this yesterday. Once again, when it comes to the political debate about a diplomatic way forward, when it comes to Russia and the war in Ukraine, well, we did not get a lot of detail on that. When you ask officials that we have been for the past 2 days, how will this end? What is the end game? They still don't know. And the concern here is that, of course, the war could get more brutal, and we are already seeing that reflected in places like Mariupol, the way that the civilian population has been treated, horribly treated, for 2 weeks. So this is a story that in many ways continues, and it's not for the better. At this point, it really isn't clear what the diplomatic solution to this war is. And when you speak to the Ukrainians, we're about to speak to a senior official very close to President Zelensky, they still tell you the way we view this, it's an existential country for a country, and we're not going to give up. Ukraine will not surrender just like that.
Anne-Marie, the president just hitting the tarmac. Talk to me about this. We have discussed things at NATO. We've discussed things at the G7 European Council meeting as well. Can you talk to me about how unique this moment is between the President of the United States and the Polish president?
Well, first off, Jonathan, it's starting off a little bit delayed because the Polish president's plane actually had to be diverted to Warsaw. We had to switch to another plane. So the President of the United States will be landing in Poland, in that border town, before actually the Polish president is there. This is really a twofold moment. One is the humanitarian effort. This is the more emotional part for the President of the United States. More than 10 million people have been displaced in Ukraine alone. More than 3 million people fleeing to neighboring countries surrounding Ukraine. Poland being that epicenter, more than 2 million, Jonathan. And even in the streets, you can see the outreach of the Polish people to the Ukrainian refugees that are coming to Warsaw. And I'm just outside the Ukrainian embassy in Poland that is dealing with this influx. Then, Jonathan, there's going to be a little bit of a diplomatic tightrope for the president to walk. This is a populist leader, a populist government. They've had a lot of criticism in terms of the judiciary here, in terms of that independency, also as well as rights about the LGBTQ community, as well as the independence of the media. So this has been kind of a fringe country when you look at how its relationship is with the European Union. At the moment, it's even fighting with the European Union for some of that COVID relief funds, given what is going on here in terms of the illiberal values that you're seeing out of this government. But now you do see the world rallying behind Poland and really giving it kudos for what has been going on, given how much of outreach Poland has had for this humanitarian crisis.
Anne-Marie, I think the final question we've got to talk about is military hardware. The Ukrainians are still asking for help. We know that there has been the offer of assistance on things like fighter jets, and you spoke to John Kirby of the Pentagon yesterday. Can we finish there? Whether that comes up in conversation in Warsaw and where we are in that debate at the moment.
So from the beginning, the Polish really kind of took the Americans by guard by saying, we're going to give these MiGs up, but we're going to put it to a United States military base in Europe, and then they can be the dispatch. And John Kirby yesterday, Admiral, he's the press secretary for the Pentagon, said that Poland can do that, but they had an issue with coming in from the U.S. Air Base. What I just heard yet again from a Ukrainian official, the Ukrainian ambassador to Poland, was enough is not being done. The humanitarian effort, the diplomacy, all of this is welcomed, but what they need is more military support. And without that military support, they won't be able, Jonathan, to stop the humanitarian crisis that a country like Poland right now is dealing with.
Bloomberg's Anne-Marie in Warsaw alongside Maria Tadeo in Brussels. From here, the president in a city very close to the border that Poland shares with Ukraine. From there on to Warsaw, where Anne-Marie is, and full coverage through the day with the Bloomberg team worldwide on TV and radio. For our audience worldwide, a big move in this market too, not in equities, but in bonds, and a big call about what the Fed will need to do as well in the face of a war in Europe. From New York City, this is Bloomberg.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It's 30 minutes into the U.S. trading day on this Friday, March 25th. Here are the top market stories we're following for you at this hour. Yields spike, bonds selling off, stocks are trading with a cautious tone. Meanwhile, Russian stocks take a hit as the ruble strengthens, reversing yesterday's market moves. Biden's final European stop, the president visits Poland, a key NATO member on Ukraine's doorstep. We'll bring you an interview from a top advisor to President Zelensky. And cutting dependence, the U.S. and the EU will push to boost LNG supplies to Europe by the end of the year. But how viable is the plan? We'll talk to the German ambassador to the United States for her take. From New York, I'm Kriti Gupta with Guy Johnson in London. Alex Steele is off. Welcome to Bloomberg Markets. Guy, it's all about geopolitics here, but I think one of the big kind of concerns is you have these very big grand gestures, very big plans. At the end of the day, how much of this can actually be done by the summer, by the winter, even in the next 5 years?
Yeah, the details really matter, and as you say, some of the energy agreements that have been talked about today are lacking in that detail. How those details get resolved will be critical in the way that Europe weans itself off Russian energy. It is geopolitics today, but we've seen some really big moves over the last 10-15 minutes in the bond market. As you say, Kriti, US yields, front-end yields snapping higher over the last 10-15 minutes, and that's really worth paying attention to. The cause, I'm not entirely sure, but let's plug some data into what we're getting here. We're getting the University of Michigan sentiment numbers. They're coming in pretty much in line with expectations. The headline number, 59.4, that's a little weaker than the 59.7 we saw last time round, and the expectations as well. Current conditions, 67.2. Again, a little off, but not much. Expectations going forward, 54.3. Again, pretty much in line with expectations. Then I think we get to the critical bit, which is the forward-looking inflation indicators. 5.4 1 year, 5 to 10 year inflation at 3%. 5 to 10 at 3%. The big question to my mind, though, Kriti, is consumers sounding downbeat, but they've got a lot of money in their pockets. Do they continue to spend that money?
Yeah, and we actually are getting, in addition to those home sales data, we're also getting Michigan sentiment data. You are seeing a 59.7 handle on the UMich data there, and 59.4 was the estimate. So you are seeing it come in line a little bit. But once again, the question is simply, does this stick? Does this mean people keep spending, and does the economy run? Or are you starting to see elements of that demand destruction?
Absolutely. Let's get back to the geopolitics now and talk about that. President Zelensky of Ukraine continues to ask for more. He wants more assistance. He wants the West to continue to deliver and deliver more. So the key question is, what now needs to happen? What is Zelensky ultimately going to be looking for? Bloomberg's Maria Tadeo is now standing by with a key aide to President Zelensky. So the question is, what comes next? What do we need? Where are negotiations? Let's hand things over to Maria Tadeo.
And let's go to Ukraine, to Kyiv, the capital of a country that's been at war now for a month. It's an undisclosed location, of course, for security reasons, but we're very happy to be joined by Ihor Shovko, who is, of course, a key ally to President Zelensky and, of course, works very closely with him in his cabinet. And, sir, of course, every day we're very happy to talk to you. We know these are very difficult times for your country, especially we think about the people of Ukraine and the ordeal they go through every day. But I have to ask you, at one point, this war is going to have to an end or come to an end. And of course, you're hoping for a diplomatic solution out of this. What is the state of play at this point? Because we hear a lot of contradictions between the Russian delegations and then the Ukrainian delegation and their take on things. Where are we now?
Well, thank you. First of all, as far as the negotiations are concerned, starting from the first round of negotiations, we were hoping that Russia would be constructive during the negotiations. If you remember, during the first rounds, they were just not mere listening to Ukrainians' position. Instead, they were only talking about their positions, ultimatums. Then they started to listen, to hear. Now we're in the fourth round of negotiations, but unfortunately, even those agreements which which were reached during the negotiations are not fulfilled. I'm talking about humanitarian corridors, exactly about the humanitarian corridor from the city of Mariupol, which, functions not to the full extent. So whether Russian delegation is serious or it's dragging on the time for the currently, that's a big question, because, they were hoping to get much achievements on the ground within the 3 or 5 first days of war, and then to be with a strong negotiation position. So since they are failing now on the ground with their proclaimed goals, they are waiting what will happen next in order to strengthen their position. But the only serious negotiations could be on the level of presidents of Ukraine and Russia. My president keeps reiterating he's ready for negotiations. He's ready to sit at the negotiation table with President Putin, possibly with some other world leaders. But unfortunately, for the time being, we feel the lack of readiness from Putin himself to be the part of the negotiations.
And sir, you say that Russia is losing the ground, or the war on the ground. I know a lot of this information is delicate and you can't disclose it, but when you look at the map of Ukraine, at this point, where is it that Ukraine is fighting back? Where are you trying to push back the Russian army, and what is the state of this army?
We'll give you 2 examples. Just yesterday, in the temporarily occupied port of Berdyansk, the city of Berdyansk in the south, in the Sea of Azov, we managed to blow up the big Russian transportation vessel carrying 400 manpower and several dozens of tanks and armored vehicles. This is the example that any city, even if besieged or temporarily encircled, occupied, does not under full control of Russian Federation. Yes, they try to install their administration. They try to arrest peaceful citizens. They try to deport peaceful citizens to Russia or to the uncontrolled parts of Ukrainian territory, just like it happened in Mariupol. But in vain, people are going out on the streets protesting against the Russian armed forces and occupation powers. As far as Kyiv outskirts are concerned, also the situation is much better now, because we managed to take back some smaller cities and villages, and to reinforce our positions. So currently, I would say the war is about kind of position in war. They're trying to regroup their forces. They're trying to enrich the manpower, because with current amount of manpower, they will not be able to besiege any major city as they wanted to in the beginning.
And sir, on Sunday, Russia gave an ultimatum for Mariupol, saying stop the fighting, give your weapons, otherwise everyone will be tried by tribunal. And Ukraine said we're not going to surrender any of our cities, and we're not going to engage on our territorial integrity. Is that still the thinking of the government, that you're not going to surrender anything, but for you also the territorial integrity? And of course I talk about Donbass, and particularly Mariupol, with that corridor it could create to Crimea. Is that sacred for you? You're not going to give anything away?
Yes, absolutely. Position of the president and the government and all Ukrainian people, we will not surrender. We can surrender on only one case. If they kill all of us, if they, drop the last blood of the last drop of blood, Ukrainians will surrender. But never ever, not in Mariupol, not in any other smaller cities captured now, not in some encircled cities like Kherson. We will not surrender. We will fight till the end. As far as the territorial integrity of Ukraine, no, never. Yes, never we will trade away any part of Ukrainian territory, be it Ukrainian Donbass or be it Ukrainian Crimea. So this is not a negotiation position where we could meet their requirements.
And of course, we're on Bloomberg TV and radio, and we're speaking to Igor Zhovka, who is a key ally to President Zelensky. And the reason, sir, why I ask you this question is because today there was a report by the Turkish media suggesting that they had information that Ukraine and Russia had agreed on 5 points, and the only point of tension at this point was Crimea and Donbass. But based on what you say, you're not going to give anything away. This is not part of your peace deal. Is this report that was reported today by the Turkish media fake? Is it false?
Well, let's not comment the media reports in all the media they might appear. There is a principle in the diplomacy: nothing is agreed until everything is agreed. So no, I will not comment this, and once again reiterate, we will not trade away any single inch of Ukraine's territory.
And sir, of course, there has been 2 very intense days of diplomacy here in Brussels with NATO, and then, of course, with the European leaders. But I want to ask you about NATO. It is very clear, and your country now says this openly, we've had a brutal reality check. NATO is not going to help us on the ground, and of course, maybe we may not have to apply for NATO membership because we're not going to get it. So if you don't get NATO, what else do you want to get? And the question, of course, here is, if you don't have NATO, then are you going to double down for EU membership? You want to be part of a member of the European Union for a peace deal to come to fruition?
Absolutely. If NATO is not ready to accept Ukraine, a strong Ukraine, a Ukraine with strong armed forces like we can see. So my president told to NATO members, please do not tell me now about non-adherence of Ukrainian armed forces to NATO standards. We proved that the Ukrainian armed forces are of high standards. So yes, I mean, we feel the reality. If NATO is ready, then Ukraine will not, knock on the closed door. My question is whether NATO is capable to defend even its own member states. I mean, let's not talk about Ukraine, but let's talk about eastern flank members of NATO. But right you are, we are absolutely putting our hope on having the EU membership. My president applied with the application on the end of February. Today we're here in the middle of March, and we want this application to be delivered and to be processed in a very high speed, because we don't have enough time for usual type of bureaucracy or whatever. So we're thankful for yesterday's decision of the European Council to reinforce or to reiterate its appeal to the Commission to start the process of preparing the opinion. And once again, we are talking to all the leaders of the European Union members. Please do not drag on the time. Ukraine is fighting now. Ukraine is fighting not only for itself but for all the European countries. We are no home front. So please, Ukraine deserves to be a part of the European family. And what Ukrainians doesn't deserve, and Ukrainian people do not deserve, is to dig our application in the bureaucracy routine or some reflection period. So yes, we are ready to become a member of the European Union as soon as possible.
So, sir, just to make it very clear, because this is very important, especially here in Brussels, you've made it clear you don't trust the Russians. You always cite the Budapest Memorandum. You say you gave a lot away for nothing. Russia is a country that you do not trust. So I wonder, in that international peace deal, security guarantees that you want, are you going to insist that EU membership is part of that deal?
Absolutely. Membership of Ukraine to the EU is a part of our security guarantees. But secondly, we want to have a set of security guarantees from the world leaders, such as US, United Kingdom, Germany, France, and Turkey, to guarantee that the aggression against my country or any other European state or international partners will not happen in future, because right here we had this piece of paper, this Budapest Memorandum, which never worked, neither in 2014 when Russia started its aggression, nor in 2022 when it started an open war. So we do not need another Budapest Memorandum. We need a strict, hard security guarantees, a system, if you will, of security guarantees, a new system of security in Europe, if you will. Ukraine should be in a cornerstone of the security system. And yes, we are already negotiating with our partners to think about possibility of establishing such kind of guarantees.
And sir, a lot of this, of course, hinges on the Russian side too, and Vladimir Putin. At this point, it's very difficult to figure out what he wants, because we barely hear from him. But today he did repeat this line: our goal, our military goals will be completed, and in particular, the liberation of the Donbass. When you hear that, what does it mean? What is it that he wants? Is it just about Eastern Ukraine? Are they changing their military goals because this war is not going well for Russia?
Well, it's hard to commend Mr. Putin. He can only commend probably himself. No one else, even in Russia, could exactly know what does it mean. But look, just to remind you, they started from Donbass. They started from Donbass 8 years ago, and they didn't even manage to capture the whole part of Donbass. Now, if he's saying this, that clearly means he's failing with his original goals. But even as far as Donbass is concerned, we will not let him fulfill this goal. Donbass is Ukrainian territory and will always be.
And sir, when he says another thing that I want is that the rights of Russian people are protected in Ukraine, in this country that he believes in many ways is historically connected to Russia, and the Ukrainians or Russians are one people. Is that something that for you could be a problem to concede that perhaps the Russian speakers or Russian background in Ukraine should be treated differently to Ukrainians?
No, we absolutely, as far as the rights of people are concerned in Ukraine, be it Russians, Ukrainians, Jewish, Poles, Crimean Tatars, all the rights of these people are absolutely treated equally, was, were, are, and always be. So this is absolutely artificial prerequisite for his campaign, for his war against Ukraine. And we do not break. We have to adhere to all the international treaties as far as the language is concerned, as far as the education is concerned, as far as the culture is concerned. We were treating absolutely rightfully the people in the Crimea. So please do not follow this narrative. It's absolutely no problem for guaranteeing the human rights in Ukraine.
So that wouldn't be a problem. And of course, the other big question is the Russian oligarchs. There has been a lot of debate about how powerful they are and what kind of influence they have on Vladimir Putin. And in particular, we hear always the name of Roman Abramovich. Is he participating actively, speaking with you and the Russians to try to get to a diplomatic solution? Is Abramovich really playing a role in this?
Well, I do not want to comment the rumors which are now in the press, but I will answer you like this. Any help of any individual or any international leader to bring peace to Ukraine is absolutely valuable.
And of course, yesterday we heard from the President of the United States say we are not going to actively participate in the war, but we want to help Ukraine. And there's already weapons on the way to Ukraine. Are you seeing these weapons, and how bad do you need them? Because, of course, a war, it really does reduce a lot of resources. It's very intensive when it comes to the weapons. When are you receiving any of this?
Well, yes, we're thankful to our Western partners, to the US and other countries. Yes, we're receiving the weapon. It's not enough. It's too slow, but that's what we need and what will be further need. Definitely, I will not comment here about concrete pieces and items and amounts and volumes, but without the support of our Western partners, it would be much more difficult for us to struggle. And I'm talking not only about ground weapons, so anti-tank, surface-to-air missiles, but about air defense capability. That's what we really need also, because we have to close our sky, and any possibilities such as fighter jets, such as anti-air warfare system or anti-missile warfare systems are of importance for us.
And sir, I know this is a very difficult question to answer, but as my last question to you, it's been a month of war. You make it clear you're not going to trade Donbass. That for you, Crimea definitely is Ukraine, that a corridor in Mariupol is something you're not going to accept either. And you also say that negotiations are still at a point where the two sides are far apart. And you have weapons and you want to continue to fight. So how long can this war continue to go on? For we have heard from some members of your own delegation that Ukraine believes that the fight could possibly continue until the end of April before it settles to the actual talks.
Well, let's not speculate about the terms of war. We are ready to end this war today or tomorrow. I mean, we are ready for peace negotiations. We will struggle. We will struggle till the victory. Not ever and never ever we will surrender, neither in the city or the part of Ukraine or generally in Ukraine. Definitely all the people of Ukraine, leadership of Ukraine.
And this is very important. And sir,
Sorry?
And if I could just interrupt you just very briefly, what you say to us is that the West is interpreting what's happening in Ukraine wrong, that you don't want just any peace deal, you don't want just any ceasefire. What you say is that you're convinced you can win this war, so you're going to fight as long as needed.
Yes, absolutely. We will not don't want the peace agreement on the Russian terms. They wanted us to have a peace agreement on the Russian forms at the beginning. They wanted all their provisions to be implemented, all their demands and red lines. No, we don't have any agreement, any peaceful agreement or the peaceful agreement at any terms. We will want the peaceful agreement at Ukrainian terms because we are struggling, we are surviving, we will win.
Well, sir, thank you so much as always. We appreciate your time. And of course, it seems silly to say this, but of course, stay safe in such a difficult time for Ukraine. Guys, back to you.
You might hear the sirens in the air, anti-air raid, so I have to go to the shelter.
Okay, Maria Tadeo speaking with Ihor Zovska, a top advisor to President Zelensky, bringing home right at the end of the interview just how difficult this situation is, just how difficult it is to run a government. Amazing performances in terms of the media that the Ukrainian government is running at the moment. To see President Zelensky speaking to Parliament after Congress, after Parliament, absolutely amazing. I just want to bring you the other headline that seems to be dominating the story related to what Maria was just talking about. Russia saying the Ukrainian operation is now focused on the Donbass region, that according to Interfax. So how do you factor this in to your portfolio? How do you think about investing in such a difficult geopolitical crisis? It seems trite to talk about this maybe at a time when so many are suffering in Ukraine. But you've got the geopolitical crisis and you have a very aggressive Fed, it now seems. Let's put this all together. Joining us now is the founder of Achilles Management, Sachin Kahuja. He is a former partner at Apollo Global Management. Also with us, Bloomberg Wall Street reporter Sonali Basak. Sachin, let's bring you into the conversation. We find ourselves in a situation where we have a war in Europe. The inflationary impact of this as a result of what is going on with Russia is absolutely enormous. You have a Fed that is stepping on the brake very aggressively. Does all of that come together basically to signal a recession? Is that the way that you're now thinking about the world?
So I think 12 months ago, we talked about the markets being hooked on stimulus and liquidity. And I think this year could be the year that we start to see what cold turkey really looks like in an atmosphere of heightened valuation uncertainty. And so if we start with credit, I think there's a few things that people are not talking enough about. I think the first one is that the cost of borrowing is not going to be free anymore. The hurdle rates are not going to be ultra low anymore. And what that means is buying a basket of credit, diversified, and adding leverage on top to get to where you'd like to be in terms of return. Yep. I'm not sure that's going to cut it this year, Guy. And so I think that when you have an equity valuation cushion ahead of you in debt, which is less stable because of possibly a recession or at least a slowdown with these rate hikes and central bank printing less money or reducing their balance sheets, you probably want to be higher up the capital structure in senior secured than chasing the yield that's at the bottom. And the other reason I say that is if you look at all of the high yield debt that was issued in the pandemic in the 5% coupon zip code, that's starting to look like it would need some kind of repricing or readjustment when rates are heading steadily, north of 3%.
Sachin,
and so I think there's not enough to talk about this right now.
What about the fact that borrowing costs going up could put many investors in a squeeze here who are relying on leverage to engage in these markets? Do you see, when you look around yourself, at your rivals, at your peers, that there's a lot of pain out there?
I do. I'm not sure it's going to be today, but I think we're creeping into it, and that's why I said I'd rather be looking senior secured than looking junior at the moment. And it's also why we see something of a bit of a pivot. So when you have public markets, which are in the state they're in right now, and what we're anticipating to happen, we're probably pivoting a bit to private markets and taking that illiquidity return premium because we can take advantage of some things you're talking about, whether it's secondary stakes, whether it's private credit, where asset managers are bypassing Wall Street entirely, or whether it's other sectors that, hopefully are less correlated to the macroeconomy, like like insurance, or infrastructure and real estate.
Well, you were talking, this is Creedy in New York, by the way, you were talking about simply the risks that are coming to the economy. Let's talk about, instead of the liquidity of the markets, the liquidity of the consumer and of really corporate America here. There is still a lot of money flowing around simply from the excessive amounts, record amounts, I should say, of fundraising that happened in 2020 and arguably 2021 as well, not to mention that government stimulus. How does that factor in terms of really preparing, I guess, the end consumer and a lot of these corporations for perhaps demand destruction, perhaps those commodity shocks?
So I think it's a little bit early to tell because it depends on the pace of the developments we talked about, whether you're talking about rate hikes or you're talking about slowing down the economy. But I think as far as investing is concerned and our pivot, let's say, to private markets, I think you'll see a real flight to the first tier. because it'll be quite apparent within a few quarters of mark-to-market valuations which investment firms have been able to navigate that environment in private markets as things have just become, a lot less easy than let's say in the last few years through the pandemic. It was a very profitable period through the pandemic for a lot of these firms, and I think we'll see much more differentiation in the near term. And if you look at, for example, Kriti, what's going to happen with the repricing of buyout debt and some of the other securities we've talked about, they're going to be repricing into a much less benign, financial environment.
Sachin, I want to talk about repricing, and I want to talk about private assets in the vein of Roman Abramovich over here, because you have a lot of peers, a lot of the folks that are involved here when it comes to the Chelsea Football Club and buying the asset from Abramovich, whose assets are frozen. Can you talk to me about the difficulties here in an asset sale like this and the dilemmas that are arising for the folks looking to buy assets here from billionaires who are Russian?
So, look, I think there'll have to be transparency when the sale clears. I mean, I'm not sure whether you're going to get a full sources and uses page to figure out exactly where the money's coming from and exactly where it's going, but you're probably not that far off, because everyone's going to want to know, exactly where the proceeds are going. But I think a lot of that has been addressed by what's been announced already, that I understand at least the proceeds will be going to victims. What's interesting here is that you have, the forced sale of a first-class asset, an operating asset that employs a lot of people and represents, one of the important cultural icons of, of the sports industry in the UK. And there's no surprise, I think, that you have investors who would have a financial background looking at this asset, precisely, Sonali, because it's complex. You have the real estate, which is a complex set of parcels. The pitch is owned by one entity. You have properties around the stadium that will need to be unlocked in order to develop the stadium. So I think, in terms of looking at where to put money to work in a sort of complex geopolitical environment, I think there's no surprise that you're going to have people with a financial background looking at that asset.
Sachin Kashyap, Achilles Management founder, and Bloomberg Sonali Basak, thank you very much indeed. Great to see you on set. Thanks for joining us here in London. Okay, when we come back, we'll reappraise you of the situation in the markets. Huge snap higher in front-end yields over in the United States. We have moved sharply higher in the last hour, actually on both sides of the Atlantic. We'll analyze those moves next. This is Bloomberg.
Well, we're an hour into the U.S. trading session. Bloomberg's Abigail Doolittle is tracking the moves. We have some moves in stocks, but I think the bigger move might be in the bond market.
I think you're right about that, Kriti. We have this continued sell-off for bonds right now with that 10-year yield at 2.45. That's really pretty incredible. But to go to the top of the board, the S&P 500 now up for another day, up 0.3%, heading to a second up week in a row, a gain of greater than 1% on top of last week's big move. So there is a bit of a rally here. The NASDAQ 100 sort of fluctuating, the dollar down slightly, but to Kriti's point, bonds selling off once again, and relative to a chart that I've shown before, above that resistance. It's going to be very interesting to see whether or not yields come back in on what's called a false initial reaction. During the break, Kriti was asking me, do you know what's going on with bonds? And I said, what comes to me is things can go longer and further than you think. That's what this looks like. However, it could also be the fact that the WIRP, the World Interest Rate Probability Function of Bloomberg, is now pointing to 8 hikes this year, 2% rate by the end of the year. So you can see this. I mean, this is just an incredible backup. And in fact, Citi, their chief economist, was telling John Farrow on the Open that he's expecting the next 4 meetings to be meetings of 50 bip hikes at each meeting. I mean, it's just incredible, this catch for inflation. Let's see whether or not it happens. There's lots of debate around this, of course, but this could be, of course, one reason for the 10-year yield in particular to be flying higher. As for commodities, not as much. You can see that gas futures are up. However, European natural gas futures down, oil down 2.3%, but up on the week, and then wheat down just a little bit. Lots of mixed moves, but overall, Guy, it does feel as though, especially since you have the S&P 500 higher, Haven bonds lower, that we're in this risk-on streak that started probably last week.
Yep. Certainly did. The moves today are fascinating. Causality I'm trying to work out still. But as you say, there are a few options out there today. We're also coming into, obviously, the end of the month, which is probably worth bearing in mind as well. Abigail Doolittle, great stuff. Thank you very much indeed. Let's turn back to geopolitics. President Biden has now arrived in Poland. His visit firmly puts the spotlight on U.S. aid to both Ukraine's military and the several million refugees who have now fled the country. Many of them remain in Poland. Earlier, the US and the EU announcing a deal to help Europe also deal with its energy crisis.
The United States, together with our international partners, we're going to work to ensure an additional 15 billion cubic meters of liquefied natural gas, LNG, for Europe this year.
This will replace the LNG supply we currently receive from Russia.
Europe is going to need a lot of help on a number of different fronts, not only on the energy front, but also in managing this refugee crisis that this conflict has created. Bloomberg's Anne-Marie, our Washington correspondent, is in Poland with the president. Anne-Marie, what message does the president bring to those millions of refugees in Poland right now?
Well, Guy, the message is clear that the United States wants to be able to do whatever they can in order to help relieve Europe and especially these surrounding countries of Ukraine like Poland when it comes to the refugee crisis. UNHCR says 10 million people have been displaced from their homes, more than 3 million on the surrounding countries around Ukraine, and just in Poland alone, it really is the epicenter of this humanitarian crisis. More than 2 million people have crossed the border fleeing Russia's invasion of Ukraine into Poland. And Guy, I am right now at the Ukrainian consulate in Poland, where you have volunteers here trying to help alleviate some of the issues that this consulate is dealing with. An influx of people who have fled Ukraine without proper documentation, or they have children who are just too young and they never got a passport for. The translation issues, all the basic needs you would need in terms of documentation to live an everyday life, to get a bank account, to sign your children up for school, to get medical aid. This is what Poland is dealing with right now, and there needs a lot of support, and that is really what I heard as well just a few blocks from here when I was talking to the Ukrainian ambassador to Poland. Humanitarian effort is needed, but also the message really from Ukrainian officials that this humanitarian crisis will not stop unless there is more military support in Ukraine.
I'm really glad you mentioned the military support piece of the equation, because we've been hearing about countries trying to build up their defenses. Talk to us a little bit about what's going on that front. How quickly can that defense actually be built up? We had Maria Tadeo actually interview the Ukrainian advisor to President Zelensky, or one of the advisors, you say, to President Zelensky, and he said, we're not going to surrender until we get the terms that we want. So this is a war that could last a while. Speak to us a little bit about the defense part of the equation.
Well, it is a war that could last a while. You know, we have to remember that there's been fighting 8 years since 2014 in the Donbass region, of course, since the annexation of Crimea of Ukraine. A war in Ukraine has been going on for the past 8 years. So when you talk to Ukrainians, they don't see a very quick, easy ceasefire, because there's been Minsk 1, there's been Minsk 2, and now we have an all-out war in Ukraine. What we are seeing from the United States, and the president has remained steadfast on this, he will not send any U.S. troops into Ukraine. There will be a no-fly zone. Press Secretary John Kirby said to me yesterday that sounds like potentially a nice way for a policing of the skies, but he said actually that would lead to direct fighting between the United States and Russia. But what you are seeing is a mass influx and a robust support on NATO's eastern flank. The president has made very clear that he will defend all territory of NATO countries, and that would invoke potentially Article 5 if Russia were to hit one of those countries. Secretary Kirby, though, when I asked him, does this mean we could see U.S. troops long-term on the eastern flank, his answer pretty much was maybe. They just don't know yet.
Bloomberg's Anne-Marie Hordern, thank you so much for your time and for your incredible reporting over the last couple of days. We are actually looking at a live shot as we were speaking to Anne-Marie of President Biden. It looks like he is speaking to troops that are, of course, in Warsaw right now. We will give you the latest as we get updates from the situation there. For more on the policy front, let's talk to Greg Valliere, AGF Investments Chief U.S. Policy Strategist. Greg, thank you as always for joining us. Talk to us a little bit about where Anne-Marie left off, the defense piece of the equation. Talk to us about what this actually means when it comes to uniting the EU and the United States, and what the timeline on that really looks like.
Well, I think this weekend is going to be remembered for a lot of things. One is the incredible unity we're seeing within NATO. Another is an agreement, apparently, on liquefied natural gas. And the other story, the biggest of all, is that the Ukrainian military is advancing. They're on the offensive right now. What a story. And there are more and more pieces. One this morning talking about problems with Russian missiles not working, problems with huge Russian casualties, a really dramatic turn of events.
Greg, the president, as we speak, is sitting down. He's eating pizza with the 82nd Airborne in Poland. It is very clear, judging by the polling data at the moment, that Americans want the president to take an aggressive line on this conflict. They want the president to do more. He has indicated very strongly that he will not be putting boots on the ground, as we've just been talking about. What else do you think the president could and should be doing?
Well, obviously, Guy, more humanitarian aid, more arms, more threats of sanctions to Russia. So I think he'll do more of the same. But the polls are tricky right now. They show that the public wishes Biden had moved sooner. The public did not like the way we got out of Afghanistan. But at the same time, if Joe Biden committed troops, I think the polling numbers would turn sharply against him.
Greg, I'm interested in that piece of the equation. When you talk about the polling numbers could turn against him, I'm curious about what this actually means for Russia on the side of this. I mean, we mentioned at the very start of your very first answer the idea that they're losing some of the steam, some of the momentum on the battlefield. But does that mean that the effect or the momentum from Russia, or I should say the decision-making from Russia, I'm sorry, I'm stumbling over my words, does that intensify there? That seems to be some of the concern from the people, from the reporting we've heard from on the ground in Ukraine.
I think really the key factor here is going to be Russian generals. They've lost 5, maybe 6 Russian generals have been killed in action. I hear, like you, reports of bad morale, of the troops not being adequately fed or clothed, with big losses, big surrenders on the part of the troops. So I think the Russian military is getting cold feet. Can't prove it, but that's my hunch. And I think in Moscow, there are a lot of wild cards, the oligarchs and the generals.
Greg, in Syria, we talked red lines. Those red lines were breached. and then the policy response was not there. How would you anticipate that the Biden administration would respond if we were to see chemical weapons being used in Ukraine? How different would it be to the Obama administration's response?
That's a tough one, Guy. I think that we can't respond exactly as the attack occurred, but at the same time, I think that we would probably reconsider the open sky policy. We'd reconsider sending jets. We'd double down on sanctions. But in terms of an overt military response from the U.S., I don't see it right now.
Greg, we're going to wrap it up there. Thanks very much indeed.
Okay.
Greg Valliere,
right.
AGF Investments Chief U.S. Policy Strategist. Sir, have a great weekend. Thanks, Greg. Really appreciate it. Okay, what are we going to do next? We're going to have more on that deal designed to wean Europe off Russian gas and to replace it with American gas. We're going to talk with Germany's ambassador to the United States, Emily Harbour, joining us next. This is Bloomberg.
To find answers now.
Let's check in on the Bloomberg First Word News. I'm Rishika Gupta. U.S. officials are worried that Russian President Vladimir Putin may lash out dangerously. They say Putin's tendency when boxed in is to escalate rather than back down. Russian troops have found themselves bogged down in Ukraine, and Western sanctions have begun to take a bite. Speculation is that Putin might respond by using chemical or even nuclear battlefield weapons. The mystery is deepening over that crash of a China Eastern Airlines Boeing 737. At least one piece of the plane appears to have broken loose well before the impact. It was found about 6 miles away from the main wreckage area. That could indicate the plane suffered some kind of mid-air breakup. And the US and the European Union have agreed in principle to a new data transfer pact. That potentially averts a doomsday scenario for tech giants such as Facebook parent Meta Platforms and others who rely on free flows of information. A previous agreement was struck down due to concerns over the power of American agencies to snoop on the data. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg. Guy.
Rika, thank you very much indeed. Let's talk energy policy. As we've been mentioning, the US and the EU announcing a plan to replace some of that Russian energy with American LNG, liquefied natural gas. Joining us to talk about this is Germany's ambassador to the United States, Emily Haber. She was in Russia during Putin's rise in the 1990s. She knows, therefore, a little bit about the Russian president's trajectory. Emily Haber, thank you very much indeed for your time. We really appreciate the time that you're giving us today. Let's talk about energy policy. Germany is saying that it will be almost completely independent of Russian energy by mid-2024. How realistic is that target?
First of all, it's a sea change in German thinking. Previously, hyperconnectedness was considered to be part of the of stability, and I think that the war, Putin's war against Ukraine, has buried that notion. We understand now that ridding ourselves from energy dependence from Russia is a requirement, is of paramount importance for our national security. So the announcement you have mentioned just before of the American president for LNG exports to Europe will be a huge part of that picture. Estimates say that it may replace about 1/3 of the energy imports to Germany to Europe from Russia. So our thinking is right now, by summer this year, the German economic minister has said that we want to slash oil imports from Russia by half. We want to get out of the dependence from coal by September. We want to get as far as we can totally from the dependence from oil by the end of the year. The gas markets, as you know, are a bit different because they're not global markets. That may take a slightly longer time, but we're determined. We want to be free of energy dependence from Russia.
Ambassador, it's Creedy in New York. We know the German economy minister just returned from Qatar. He's securing longer-term purchase agreements. We also know the exports are starting to ramp up when it comes to LNG from the United States as well. Can you speak to us a little bit about Nord Stream 1? Is Germany willing to halt purchases from that pipeline?
We're focusing now on oil and on coal and on gas, obviously. To be free of the dependence from gas will not happen overnight because the gas market is not a global one as the oil market is. But make no mistake, we are determined and we're doing a lot to be able to replace gas imports from Russia. You mentioned LNG purchases in Qatar, in the United Emirates. We're talking to Norway. We're taking note of the announcement of the American president. We are building LNG terminals in Germany. We are altering the architecture of our storage facilities. we are accelerating renewables. All of that is designed to cut off our dependence on gas imports.
Ambassador, you have been a student of Vladimir Putin's career for decades. Why did Germany not see this coming? Why did Germany put so much of its eggs in the Russian basket from an energy perspective? Only a few months ago, we were arguing about whether or not Nord Stream 2 was going to be opening on time. Ambassador, why did Germany get this so wrong?
Because it had been an axiomatic element of German stability thinking that hyperconnectedness and that interdependence would be conducive to stability. And I would point out that over the past 30 years, Russia, with regard to Germany, had been a reliable partner. But that has altered overnight when Russia made clear that it was going to challenge the fundamentals of the European post-war and post-Cold War order, and that it was ready to weaponize energy dependence, energy exports, and energy relations. That's a sea change for us, and we have taken swift action to draw our policy conclusions from that.
Ambassador, in the same vein, we know that Germany and Europe broadly has made a lot of changes when it comes to renewable energy. And we know before the war in Ukraine really broke out, there was already issues when it came to energy supply this past winter. Do you feel like the transition perhaps, or the speedier transition to those renewable sources has perhaps left Germany and Europe broadly more vulnerable to these commodity shocks?
It has become blatantly clear also as a consequence of Putin's war against Ukraine that transition to renewables is part of the national security picture overall. So it's not only about environment, about combating climate change. Moving towards renewables is part of the national security requirements. So I would not totally agree with what you just have said. It's not. It does not delay. It actually will accelerate transition.
Ambassador, is Germany now ready to provide its own security, or provide enough to ensure its own security? We are going to see a significant rearmament. My question to you is, how do we ensure that that rearmament is delivered effectively? And also, what is the primary security architecture in Europe going to be going forward? Is it going to be NATO-based, or is it going to be EU-based?
It's going to be NATO-based and it's going to be EU-based. There are like communicating pipes, and you should see that European efforts in reordering its security environment is actually a security asset to NATO as well. The way we cooperate happens in an environment where we are mutually reinforcing what NATO and what EU can do respectively. So both is important.
Ambassador Emily Haber, German ambassador to the United States, we thank you so much for your time and for your insights. More conversations coming up next. This is Bloomberg.
just want to point out that this snap higher we're seeing in the US 2-year is accelerating now to the upside. We're at session highs or session lows, depending on your point of view, in the bond market. Let's talk a bit about what's going on